Hello and welcome to Explain the Charts. Today is March 11th, 2025, and we're going to break down USDCHF, analyzing both the latest news and the chart data to help you understand what's driving this pair. Recent headlines indicate that the USDCHF has been weakening amid tariff worries, with the pair trading near 0.8800. Safe haven demand for the Swiss franc appears to be increasing, adding further pressure on the US dollar. We're also keeping an eye on the anticipated deceleration in the US CPI for February, as well as today's new tariff announcement, which could once again shake the market. Let's jump into the charts and see how these events are reflected in the price action. Looking at the daily chart, we can see a general downtrend over the past few months, with USDCHF falling from a high around 0.9200 in late 2023 to its current level. Notice how the price reacted to Trump's talk about tariffs on the USD around late October of 2023, with a dramatic drop on the daily chart. We've seen some brief periods of consolidation, but the overall momentum has been bearish. Now let's narrow our focus and examine a more recent range of candles on the daily chart to identify potential support and resistance levels. Zooming into this section, we can see that the price has been consolidating in a range between approximately 0.905 and 0.877 over the last month. It looks like the pair is struggling to break above 0.88, reinforcing this consolidation as a potential resistance level, so keep an eye on 0.88 as a key level to watch. On the downside, the area around 0.877 could act as a possible support level. To get a clearer picture of what's happening in the short term, let's switch to the 1-hour chart. On the 1-hour chart, the recent price action shows more volatility. The pair initially fell from the 0.883 range on March 6th to the low 0.876 range on March 7th. More recently, however, the pair has been trading between 0.877 and 0.882, so this range provides some short-term trading opportunities. If the price breaks below 0.877, we could see a further decline towards the 0.875 level. Conversely, a break above 0.882 could signal a potential move towards 0.885. Let's go down to the 15-minute chart to see what more resolution we can gain. Also, let's focus on the final few days of candles from March 7th to March 10th to zoom in even more. Looking at the 15-minute chart, we can see choppy price action, so we can't draw strong conclusions. If the price can sustain a move above 0.882, we might see a test of higher levels, potentially towards 0.883. However, given the current market sentiment, it's more likely that we'll see continued consolidation or a further move downwards. For now, the pair is dancing between 0.876 and 0.883, so look for breakouts above or below those values. Keep in mind that any surprise news regarding US tariffs or changes in the US CPI expectations could trigger sharp moves in either direction. It's important to keep your eye on the news for that. So, to recap, key price levels to watch are 0.882 as possible resistance and 0.877 as possible support. A break above 0.882 could signal a move towards 0.885, while a break below 0.877 could lead to a test of 0.875. Given the current market sentiment, with tariff worries and potential CPI deceleration, there's a slightly higher probability of a bearish move in the short term. Keep a close eye on upcoming economic data releases and news headlines, as these could significantly impact USDCHF. Remember, this is just an analysis based on the information available today, and trading involves risk. Always manage your risk and trade responsibly. Thanks for watching Explain the Charts, and we'll see you next time.